Hi everybody and welcome to another real estate video. This is Javier Vidania, the real estate YouTuber here in Phoenix, Arizona, helping you accomplish your home goals. Trying a little different setup today, so let me know in the comments below what you think. Should I go back to my desk? Should I go back to here? I actually just upgraded my mic to a Rode video mic, so that's why I'm able to kind of not be tied to a desk. So I've always kind of wanted to use this space behind me. It's all my favorite stuff here. If you can't tell, there you go, much better. So today's video, as every video I make, is all about promoting home ownership to everybody because it creates financial independence and it just establishes your claim on this world. I made a video in the past, you can go definitely watch it, where why you should buy a home in your 20s, and in this video I explained to you how my wife and I were able to buy a home when we were 21, 22 years old, and how that decision carried us forward in life and led us to where we are today. That being said, for people that are younger, there tends to be a lot of, I don't want to say excuses, but reasons why we don't move forward with that decision to buy a home. And one of the biggest reasons I usually see is college debt. Now, I'm not going to get into the politics of it or anything like that. However, the reality of the situation is most people my age, mid-20s, early 20s, late 20s, are in the situation where they have this college debt. They went to college, they got themselves a successful career or degree. Unfortunately, the byproduct of that is this large amount of debt. Now, to some people, it could be crippling and they don't know what to do and they feel like they're stuck in this bubble. They feel like their life is on hold or on pause until this loan is paid off. And in today's video, I'm here to talk about how people with college debt, even if it's small or large, how it actually impacts your ability to buy a home and how you're still able to buy a home. Once I break it down to you in a very simple and straightforward way, you're gonna realize that you're just as in good a position as most people. So let's get to it. First and foremost, let's talk about talk about the debt to income ratio, which the debt to income ratio is the one that basically establishes how much you qualify for. So a quick synopsis of a debt to income ratio is you get your debt, your monthly minimum obligations, or your minimum payments for a credit card. You can have $1 billion credit card, but if the minimum payment's only like 50 bucks, then that's the only thing they're gonna count against your debt to income ratio. They add up the potential payment of that house you're buying. So for example, if you're looking at a house and your house's payment's gonna be about $1,200, they add that to the equation and they put it against the amount of monthly income you make. So a quick example could be if you have two credit cards at $100 minimum balance or minimum payment each and a $300 payment, and you're trying to qualify for a house with a $1,000 payment, that's a total debt obligation of $1,500. Well, if your income is $3,000, then that's $1,500 to $3,000, that's a 50% debt to income ratio. And each loan program is different, but it's normally for a standard down payment assistance program or just a regular one, you need about 45 to 55% debt to income ratio, and the not so close you are to that number, the better. That means you're more flexible. I help a lot of people buy a home, 20s, 30s, 40s, who have a car payment. And you know how people are. Some people go and they buy a little, compact car with $150, $200 payment, but some people go all out. They get like a nicer car, they get not even a nicer car, just a newer car, or a truck or whatever. I help these people all the time, and they have a $300, $400, $500 car payment, and they're still able to buy a home. So you, with your student debt, you're no different than these people. However, I will say that it does get really not troubling, but it gets a little more difficult if you have a car payment and you have a student loan debt and you have more credit cards. So if anything, if you have student loans, it really doesn't free up your option for you to go get additional debts like cars, additional credit cards, lines of credit. So we've talked more about the idea. Now let's get into actual numbers. So we're gonna break this down in three categories. One, FHA. Second is conventional, and the third is a VA in case you're a veteran. Now, I did a great job explaining the differences between FHA and conventional in my other video. If you haven't watched it, please find it, seek it out, and take a look. But essentially, FHA is a program that a lot of first-time home buyers use to buy their first home. It offers a lower interest rate, but it has some caveats to it, like mortgage insurance and stuff like that. And a lot of the first-time home buyer programs are through FHA. So FHA is kind of strict. You can definitely still buy a home with a student loan, but this is what they do. So there's essentially two numbers here at play. Number one, that's kind of funny. Number one is your monthly payment that you make to whoever you pay your student loans to. Number two, no, I'm just gonna say number two. And number two is 1% of your total student loan debt. So there's these two numbers in play. So let's just use the $50,000. For some it's scary, for some it's really realistic. Let's just use it. Let's say your monthly payment to this $50,000 loan is $300. Well, that's your number one. Number two would be, what's 1% of the total loan amount? So in this situation, it would be $500. Well, FHA doesn't play around. They're gonna use the highest number of the two numbers provided to use against your debt to income ratio. So in essence, you can't call your debtor and be like, hey, can we make our payments pretty cheap because I'm trying to buy a house? It doesn't matter. They're gonna get one, if they're gonna lower your payment, then they're gonna look at what's the 1% of the total loan amount, and they're gonna use that to calculate your debt to income ratio. Now conventional, for those who don't know, once again, watch the video if you haven't, there's more liberties with it. They're a little more flexible with the student debt. So with number one being your monthly payment, and number two being 1% of the total debt amount, well, they're gonna use the lowest number. So in this situation, it's totally helpful. So if you're able to negotiate a pretty low payment for your student debt, and maybe you owe a little more than you'd like, it's okay. With conventional, you can qualify with probably for a little more because they're gonna use the lowest number against your debt to income ratio. However, it's important to know that although there are down payment assistance programs for conventional, a lot of times the best rate, the best terms are if you put your own down payment. So I know there's conventional loans that might be 3% or 5%. However, some people might not have that money ready and available. So if you are gonna go the conventional route, you do probably need some money saved up to move forward with it. And lastly is your VA. VA is the same situation. However, VA ties into our next category, which is deferment. A lot of people know that maybe student loans won't start charging you the actual monthly payments that deferred a year or 2 years out. Well, with VA, it's the same terms as before. However, if you have the loan deferred at least 1 year past the closing date of your property, then you're okay. And of course, this ties into our next category, which is deferment. It used to be known, or people had the rumor that, hey, we can just call our student loan people and defer the payment out a few years and we can buy a house that way. Well, that's not the case, unfortunately. Let's start off with FHA. If you're deferred out a year, 2 years, however long with FHA, you're trying to buy a home with FHA, it doesn't matter. If it pops up on your credit report, they're still gonna use the 1% number against you. So if you have a $50,000 student debt and you don't have to make your first payment to maybe a year, 2 years from now, it doesn't matter. They're gonna calculate the 1% of the total amount and ding you against your debt to income ratio. Now with conventional, it's also the same concept. They're gonna use the 1%, no longer, does not matter how far deferred it is, they're gonna count the 1% and ding it against your debt to income ratio. However, the good news with conventional is if you have an income-based payment plan or some kind of income-based deferment plan, usually they're negotiated in years, then they won't ding you for that 1% as FHA does. But you have to have proof that you have this income-based payment plan or income-based deferment. You have to make sure you have documentation of it, and as long as you provide that with conventional, then that could work to your advantage. And I guess my last piece of advice before I go is make sure you know exactly when your payments start. It happens all the time where they're not sure, or they're not very, they don't make it very clear when the first monthly payment is gonna be, so they're not aware until they start getting those collection calls that you're 2-3 months late. A 30-day late, a 60-day late, and a 90-day late are the worst things that could be on your credit and can damage your credit permanently. So please make sure, if you're still in deferment or you're still in college, verify what exactly your first monthly payment is going to be, and do not miss it. So that's all the time we have for today, guys. Thank you so much for watching, and at the end of the day, I hope you guys come out of this video knowing if you have student debt, it is kind of a burden that you have, but don't let it hold you back from moving forward with your financial life. And I've even known situations of people that buy a home still, 2-3 years later, they sell it and they use that money to pay off their student debt. Don't let that hold you back in life. So thank you guys. I hope you guys learned something. If you guys are interested in watching more real estate videos, we make weekly videos here on the channel, so please hit subscribe, like this video, and of course, if you think of anyone that this can help, please send them my way, or send them the video. That way they can watch it and learn from it. Thank you guys once again. Have a great day.